All right, man. 7 steps to 100x your crypto portfolio in 2025. This is a huge topic, and I think a lot of people have a lot of potential to make a lot of money very, very quickly in 2025. And that's kind of what I want to talk about today. If somebody were coming to me and asking me what they should do in crypto in 2025 to be successful over the past couple years, this is kind of the 7 steps that I have learned over the past couple years, and I would apply it all to them and help them package this up to give them the best return possible with the most risk aversion. Personally, I'm a big reader of Warren Buffett, Benjamin Graham, Charlie Munger, and I like to do investing in an intelligent way. I don't see this talked about a lot in crypto. One of the best people that does talk about it is Benjamin Cowan, but there are better and less risky ways to make just as much money in crypto, and that's what I want to try and explain in these 7 steps. But in order to do that, let's just jump into the first step. Step number one is going to be understand the market direction. Now, this is so important because as a new crypto investor, I got this totally wrong, and unfortunately this year in 2025 there are going to be millions of new crypto investors that are going to get it wrong as well. I came into the market around 2021 at almost the very top, and I started investing. And unfortunately, that's going to happen this year as well. But over the past couple years, I've really learned a lot about how market cycles work. Currently in crypto, we have a couple cycles working for us, which is why I definitely don't think that like $110,000 Bitcoin was the top. So the couple cycles we have that you should look at are the Bitcoin 4-year cycle. Typically, every Bitcoin bull market lasts about 152 weeks, and currently we're only around 113 or 114, something like that. But we still have quite a bit of ways to go on average for our local Bitcoin top expectation. Secondly, we have a global monetary policy that is rapidly expanding. This is called M2, and there is a sine wave chart that looks like this, and you can look at it and try and find it online. Many analysts will put out a version of it, but we are currently rising through the sine wave, which is technically a bullish thing, meaning that more money is coming into the world, into the global money supply. Thirdly, many countries, I'm specifically talking about America where I live, many countries are actually coming out of their inflationary cycle. Like, we are reducing rates, we are fighting inflation, inflation's kind of tamed down. And so we kind of have this US government money fiscal policy cycle that is becoming more and more in favor of risk assets and in favor of investors. As the governments kind of tame the inflation and reduce the rates, this would technically make money cheaper, and then we could be entering a season where they start actually buying bonds, treasury bonds again, leading into quantitative easing, which would mean that the government is actively pushing the markets higher by buying from the market. So we have a bunch of cycles going on all the time. In the Crypto 100x blueprint, I have more explanation about the cycles, but there's all these cycles going on all the time, and you need to understand where we are. Currently, I think we're in a great spot to have a great 6 to 9 months of bullish trajectory, and then typically we would start to see some type of a top. But the market right now, in my opinion, is primed for upwards growth. The second step is to find a sector in crypto that you love. Why do I say this? Why do you want to love what you're doing? Again, this goes back to Warren Buffett's advice when he talks about, like, if you love what you're doing, it's not going to be work, and you're going to actually become better at it and learn more about it, and it will compound. Your effort will compound if you love what you're doing. So my adaptation is, one, obviously you need to love crypto, right? Like, we should love investing because it's great and you can have returns, and to me it's really fun. But secondarily, you should love the sector that you invest in. Now, what I mean by this is, like, whether you choose to invest in Ethereum and Ethereum products, Solana and Solana products, Cardano and Cardano products, or you just invest into sectors, like I only invest in meme coins, or I only invest in gaming, I only invest in L2s, right? Whatever sector or ecosystem that you want to be in crypto, find one that you love and invest into it. This will do a couple things for you. You will learn more about the ecosystem than everyone else. You will have more fun paying attention to the ecosystem, doing the research, managing the investments, and then investing will become easier for you. Thirdly, because of all this extra attention you're giving it, you will actually know more than everyone else, and you will kind of become a subject matter expert in that area and know which investments are best, kind of know what's going on behind the scenes, kind of know the proper market timing. You will just have so much more omnipresence information than everyone else, and so therefore you could have a better potential at making better investments. My example of this is Cardano. I've specifically focused my area on Cardano. Cardano's been one of my favorite places to invest and to research and to hang around for the last couple years, and so I do hold Bitcoin, I do hold Ethereum, I do hold some other altcoins, but Cardano and Cardano native tokens are my bread and butter. That is what I love, and that's what I really enjoy looking at. The third thing you want to do is after, you understand where the market's going and if it's a good time to be in crypto, you understand what sector you love and want to pay attention to. The third thing that you want to do is build a list of native tokens in your sector. This is because in order to get the 100x, 7 steps to 100x, right? If you want a 100x, most layer 1 tokens are not going to be able to give that to you, especially if you pick like a more well-built layer 1, something within the top 30 or top 50 tokens, right? That has more presence, more volumes, more developers and apps and all this, a more well-rounded ecosystem. If you're looking for a 100x, you're unfortunately probably going to have to move some of your L1 tokens into ecosystem tokens like DeFi, DePIN, NFTs, meme coins, gaming, stuff like that. And so the first or the third step that you want to do is make a list of all the ecosystem tokens or the native tokens on your chain or in your sector that you want to take a look at. It doesn't have to be a long list. It doesn't have to be a short list. It can be any token that piques your interest. You want to find a charting platform. So like on Cardano, we have Tap Tools. On Solana, you have Dex Screener or something like that. On Algorand, it's called like V something. But anyways, you want to find a charting platform or a DEX, look at all the tokens available in your sector or ecosystem, write them all down, and build this massive list of all the ones that you want to take a look at. It can be 5 tokens, it can be 500 tokens, just make a list. Now, here's where kind of the real work comes in is the fourth step in the 7-step process is you want to filter out your list that you just made by fundamental analysis. Now, what I call fundamental analysis is understanding the unique use case. It's what value does the project have? Is it delivered? Does it have competitors, right? How does it compare against its competitors? What's the roadmap? What is, are they in their building phase or have they delivered something? What can be expected of this project? And like, what kind of niche does it fit into? Is it a DEX? Is it a lending protocol? Is it a DePIN product? And then, has it been around a long time? Has it delivered on its promises? Are the teams building? Like, have they had a hack or have they had a setback and how did the team and the project recover from it? All of these things that you have to ask yourself. How does this lending protocol compare to all the other lending protocols on Cardano or on Ethereum or on Solana, right? How do they compare to each other and what fundamental value or fundamental product do they provide to your ecosystem? Again, in the Crypto 100x blueprint in the description, it goes into this a little bit more detail. But when you're doing fundamental analysis, you basically want to understand what unique, great, amazing things your project is solving and how does it solve it better than all of the other projects in your ecosystem, therefore making it a better investment. As you do this fundamental analysis, what you're going to have to do is all the tokens that you made on your native token list in step 3, here in step 4, you're going to have to go through them and filter them out by fundamental analysis. If you find a project, say on your list there's 3 decentralized exchanges and 2 of them don't meet your fundamental analysis requirements, what you would want to do is cross those off your list and only move forward with the new list with the one that does. Now you can have 2 dexes on your list, you can have 3, right? You can have 4. You can invest only in dexes. I don't really care what you do, but you want to filter out that list you made by fundamental analysis, and any project that does not meet your fundamental requirements, you want to cross off the list and move forward without it. Step number 5 is the same thing as step number 4, except we're going to do this with tokenomics analysis. So in my opinion, this looks something like who is given tokens at the initial distribution? How much circulating supply is out there for the token? What is the token utility, and is there any expected future utility? Now, these are very important because it basically shows you the financial structure of the project and what they're expecting from investors. Now, if a project has a lot of venture capitalist investors, you might be at a disadvantage because they have more power to dump tokens, or they might be able to release tokens. And so with these 3 metrics, you kind of get an understanding of, well, what am I going to be able to do with this token? Like, what is the purpose of me holding it? Who's in control of this token, and is the market and retail investors in control of the price discovery, or is price discovery going to be hard because whales are dumping, developers are dumping, founders are dumping, venture capital is dumping, and therefore we're never going to have a true market value? And how fair are these tokenomics to me as a retail investor? This whole 7-step process, I want you to think about things from the retail investor's perspective. Typically, we're the ones to get the short end of the stick, and so with these 7 steps, I'm trying to give you something to where you can put more power into your hands. Now, you're going to go through the tokenomics of all we had our original list in step 3. Our list got shorter because of step number 4, and now we're taking that new shorter list here into step number 5. And so we're going to analyze that list, cross off any token that does not meet our tokenomics standards, and move forward again with a shorter list. So you have a big list, filter by fundamentals, now you have a shorter list. Filter by tokenomics, now you have a shorter list. That is step number 5. Filter by tokenomics, understand the tokenomics of all the projects that you have on your list and which ones meet your criteria and which ones do not. Step number 6, now we're going to look at the charts. Now you're going to filter the new list, the new shorter list that you have, filter it out by the chart. If a project has a good looking chart or a bad looking chart, it's pretty easy to tell once you jump in there. And traditionally, these charts are very closely tied into with the tokenomics of the project, especially at the inception. But with the chart, I want you to look at some bullish structures, some bearish structures. Does price look like it's on the rebound? Does price look like it's moving above moving averages? Does it look like it's moving RSIs and MACDs in the right way? Is it making new highs? Is it making new lows? Like, what direction is the trend? What direction is the chart going? Has the chart bottomed? Is it consistently making new bottoms? All of these things are things you should look at in order to understand if a token, while it could have perfect fundamentals, perfect use case, be the only one in its ecosystem, right? The tokenomics could be great, but it still could have a chart that is making lower and lower and lower and lower and lower lows and not be worth your investment. So the sixth step is to analyze the chart and understand, is this thing going in my direction? Because 2025, I mean, we don't have that much more time to invest here in this cycle. If a chart is not turning around and not having some new highs or some bullish potential, what are the odds it starts in the next couple months, right? So it's something you really got to think about and really put your time into, because, I mean, if you only got like $1,000 to invest or $2,000 to invest, you're really only going to have like a few projects to invest in. So you want to make the most of your situation. Now you're going to go through that list that you got, the shorter list, filter them out by the charts. Which one do you like? Which one do you not like? And then move on with a last shorter list into step number 7. And step number 7 is going to be probably, maybe not the most complicated, but it does always throw a wrench in people's investment decisions. And that is going to be avoiding the retail investor's emotions. I might have called it something different in the Crypto 100X blueprint, but basically it's emotions and patience and fear and greed and all the influencers going to tell you what to do. This is where you have to understand that you have made investment decisions for a particular reason. And unless that reason changes, you really have to question whether you should change your investment decision. Step number 7 is all about you versus you. It's about the emotions and the pain and the fear and the greed and all this stuff that you're going to face as an investor. But Warren Buffett, Benjamin Graham, Charlie Munger, they always consistently talk about how, the market is not something you should follow. You really should not listen to a lot of people out there. And 99% of the projects out there, in our case, 99% of the crypto projects, do not deserve your investment. They just don't. And so when you follow, in my opinion, when you follow these 7 steps, and if you really do your research right and have your own opinion and build confidence in your positions because you've done this research, fundamental, tokenomics, and chart, if you've done all that and you get to the 7 steps, it'll make it much easier to stick with your positions, stick with your decisions, have patience and confidence while we wait for this market to continue to rally. Because just like that, this market could flip and things could start doubling and tripling. And so that's the most exciting part of crypto. But in order to be in the market at that time, you need to be invested and plant those seeds now before it happens, so that you have a good seed that can grow into a tree at that time. You can have your $1,000 invested and maybe turn that into $10,000 or $100,000. The big thing I like to talk about in this 7th section when people ask me is, if you made an investment, let's say you found the perfect investment, right? You invested into it right now and tomorrow it dropped 10%. Would you be nervous, right? And why would you be nervous? If it dropped 20%, would you be nervous? And why would you be nervous, right? So you really need to understand why you're investing in things and what makes it a good investment before doing it in order to have confidence in case price decides to dip in the short term. Now, I definitely know some people don't agree with this system. This is my personal 7 steps to 100x system. I call it the Crypto 100x blueprint. But the biggest thing I want you to take away from this idea is that you can apply it to anything in crypto. You can apply it to anything in life, really. But if you want to trade meme coins, go do that. But use a system that makes sense to you, to where you have good ideas of what to invest in meme coins. If you want to invest in DeFi projects, have a good system and understand why you're investing in DeFi. You can take this, apply it to anywhere, try and aim for the 100x, and even if even if I don't get a 100x, I'd still be happy with a 50 or a 75 or an 80x because I implemented these 7 steps. This is the only way I know how to go 100x, 7 steps with a reasonable framework. And you got to remember, there's always going to be people that are going to 100x or 1000x by investing into XYZ random token, and they're just going to be making it. They're just going to be bankrolling, and that is good for them. But if you ask me 7 steps to 100x your portfolio, you ask me what plan or what strategy I would use, this is what I would do. So there are my 7 steps to 100x your crypto portfolio in 2025. This thing works in reverse as well. So when you see that chart and the indicators start to flip over, when you know the market cycle is turning the opposite way, that is when you should sell your positions. We'll keep making some videos on when we're going to sell, how we're going to do that, what we're going to be watching. But that's my 7 steps. Let me know in the comments if you agree, if you've tried something like this, or if you have your own system. Let me know in the comments if you have any other systems you've been using, and we really hope you enjoyed the video. Definitely going to see you in the next one.